Welcome back to the channel. We've got a huge video to cover today because we have a massive title of the bottom is in for now. Now we've looked at this in the past and it has proven very, very effective to look at where these particular bottoms are for Bitcoin. So let's get into that in today's video and also update that fear and greed plan because the extreme fear gets even more fearful in the markets just today. So we're going to update that briefly. So without further ado, smash up the likes and subscribe to the channel. If you are new here, thank you very much. All the existing subscribers, thank you so much for your support. We'll be here every day of the crypto bull and of course bear. Quick thanks to our channel sponsor, that is Bybit. You can do other things on Bybit besides leverage trading, which is what a lot of people think it's all it's for. There is spot trading, there is earning interest on cryptocurrencies, on stable coins, and of course, massive rewards in sign-up bonuses, which you can get using the link in the top of the video description, up to $4,100. Link is in that video description, so go check that out. Let's start with the fear and greed. We're at 8 today. I don't think we've seen single digits for an extremely long time. I can't remember the last time I saw single digits on this chart. We can go all the way back down to 10 back in January. Single digits back all the way in 2020. Correct me if I'm wrong, but either way, we're under 15 and that's what we're looking for. 15 or under by BTC. And of course, the current price that we're looking for to enter on this trade. Let's start with the fear and greed index. It is sitting at 8 today. I have not seen it in single digits for an extremely long time. It could be over 2 years since it's been in single digits, but nonetheless, we're looking for a reading of 15 or under. And this is now our 9th straight day of a reading of 15 on the fear, extreme fear, or under. Yesterday, 14, last week, 10. You can just see how fearful this market has been. If we search back, just a quick eyeball, probably somewhere around March of 2020, which is equivalent to the COVID crash low. And that's the sort of extreme fear that the market feels like it is facing right now. Remember what happened from that COVID low? The market basically bounced right out of that bottom into a pretty mega bull market. Do I think it's going to happen from this exact point? No, we're at a different stage of the cycle so far. We're only halfway through, roughly, of course, in my own opinion and my analysis, of halfway through of the bear market for Bitcoin and cryptocurrencies. I think we still got a fair bit of time to go for Bitcoin. It's pretty good because the hopium here is that we have time to accumulate BTC at lower levels, buying that dip. Of course, I don't talk about buying dips on altcoins because, I mean, I shoot myself in the foot. A lot of new people love to hear buy the dip on the altcoins. But honestly, I think that any influencer talking about buying dips on altcoins during this bearish market is basically wrecking their viewers. So that's not what I want from this. I'm looking at a more safe measure. And of course, Bitcoin is not in that bull market yet. And like we've seen every other cycle, for Bitcoin or for altcoins to take off, Bitcoin needs to be in a more bullish market, a bullish cycle, and have more confidence and hope that the rest of the market is going to move. So looking at the last 9 days, basically been buying Bitcoin every open on the market, 11, 10, 12, 12, 10, 9, 10, 14, 8. So I lie. The last time it was single digits was a few days ago. But apart from that, 2020. You can see that how extreme the fear is at this point in time in the market. However, the saving grace to looking at this particular time now, this period in May, as being a potential short-term low, maybe even several weeks of a low, is due to the extreme fear. However, the price has not dropped. Let's update this on the fear and greed plan. So the open today, $29,840. Let's add that. That now gives us an average price of $33,776. So we looked in yesterday's video on how to potentially drop that average price down by taking profits as the market runs up. So definitely go and check that video out. I'll leave a link at the end of this video to that playlist so that you can learn how to take profits in a more mechanical, mathematical, less emotional way in the market to maintain all or most of your capital rather than losing 80 or 90% of it on altcoins during a bear market. I know it sounds fearish and bearish and fuddish, but honestly, you're probably accepting of the fact that things do drop eventually. So let's go back to this particular chart and I want to just look at the market and the potential of this being a significant low for now, 12th of May. We go back 12 months. We had a pretty good top in the market as well. So going back here into May of 2021, looking at the repeat of cycles. So 12 months ago, look at the 10th of May. We had a top there on the 8th of May. That was a lower top. That actually was the day that Elon Musk went on Saturday Night Live. So that was the peak of Dogecoin. That was the lower top for the Bitcoin market. And that is a very significant time to remember, because it was a very highly emotional time. If you weren't in the market in May, learn about the emotional times that occurred so that you can use this information moving forward. The same sort of emotion that we saw in May was, the emotion that we saw in May of 2021 was so extreme. It was far, far, far more extreme than we saw at that peak into April. I vividly remember this. A lot of influencers calling for about 80 grand from this point, 100 grand from this point, and it didn't happen. So the lower top is a very good signal that the market is about to drop. What does all this have to do with today's low? It's the same in reverse, and we're using the fear and greed to give us that signal just to make things a little bit more objective. We have a reading here of extreme fear of 8. Now fast forward to today. So you get the idea here. Extreme emotions, extreme greed, lower top. There's not that energy pushing the market up. So we're going to use the same thing to the downside. Let's go to today on a shorter scale, on a smaller term time frame here. We have extreme fear on the 12th. Going back to our fear and greed, go and looking at this. So the 12th was the bar, so we'll look at the reading for the 13th. We're at 10. Today we're at 8. For some reason, the fear in the market is far more extreme today than it was when we had the low, but we're getting higher prices. So for now, there is buyers, there's whales, there's Bitcoin buyers, investors coming into the market to support the price at a higher price than they saw earlier. So the market's extremely fearful, more fearful according to that reading than it was on the 12th, and now we're seeing a higher low. This is very significant type of tape reading the market. So old school days, early 1900s, they still read off the tape. They weren't reading off computer screens. So it's called tape reading to understand what the market is telling you, what the buyers and the sellers are doing, the inside investors, the smart money, to see what they're actually doing compared to what the market is feeling. So this is sort of information. If you want to read up more about it, you got to learn from the old school guys in the early 1900s. Moving forward, looking at a potential for a short-term low here, like I said, probably looking to several weeks. That's the idea here, because we've seen extreme volume. If you're looking at candles, you got your dragonfly, doji, whatever you want to call this bar. There's multiple names in candle. In bars, this is called a key reversal. So you got a long wick down and then move back up. The open and the close are pretty close together, which means there's a lot of buyers coming into the market after all of that final capitulation selling from new money, from what they call dumb money, from people who aren't in the know and are basically just trading off emotions. They basically sold out from 30,000 all the way down to 25,000, and then the smart money was buying up. And so now we're seeing extreme emotion again. We're seeing the market being bought up again. So these are all the things that are leading towards the possibility of the low being in for now. I keep saying for now because honestly, I don't know the future. No one knows the future, but there are a lot of signals that are telling us that this could be the low, and we won't know for sure until after the fact. So you got to make some calls at the time and then look back in hindsight to see, what was I reading on the chart? Was that correct? Was that in line with what the smart money was doing? And can I use that information moving forward? Can I then go and use that analysis, that type of tape reading, to check out other lows in the market and see if I can look at this for future lows, just like what happened in February. Now, I did a live stream that day as well on the 24th of February. I was with Eric Crown. We were looking at this market. It was dropping. So the market was falling, and we thought that this was going to go below the previous lows of January. That was halfway through the day, just a little bit short of halfway. What happened next is the market got bought up by smart money, and you can see the volume coming into the market. Again, going back to the tape reading of reading the market here. So if you look at what happened just a few days ago. Look at the volume coming into the market. So this is a lot of buying coming in to support the price, while the people that are possibly selling out in fear or getting liquidated are selling into that buying. And we've seen a little bit of a bounce for now. So what happened that day? Well, we thought the market was going to keep crashing here because it was halfway through the day. The bar or the candle, whatever you're using, hadn't closed. So the data is really important. That's another lesson, to make sure you look at what the close price was. Where did it close? How did it close? Did it close on a lot of strong volume? Did it close at the top of the bar? Really, really important stuff. So the next day it closed higher. That got me really, really bullish after I thought it would be bearish, and you have to be able to flip. I know a lot of people don't like to flip so suddenly, but if you're going to be able to survive in the markets, investing or trading, you've got to be able to flip, because this is your money on the line. You don't need to take a position and stick with it forever. If you see something's wrong, you've got to flip. And there are a lot of stories of extremely wealthy traders and investors who will flip. And I've talked about that in previous videos. You might remember those from Stanley Druckenmiller, who is a Bitcoin bull now. He hated Bitcoin. Now he's a Bitcoin bull. He was around trading in the 70s and the 80s, probably earlier as well, 1970s, 1980s. This guy got in the worst trade in the 1980s and 1987 crash, was going short, then went long, flipped his position on the weekend, got out of the long position, went short again, and basically saved himself a lot of money. So flipped multiple times within a few hours and a few days, and basically saved himself. So you have to be able to flip in order to survive in the markets as well. So like we could see from that day, we got a low in. That's my little storytelling for that point. We got a low in, and then the market hadn't broken down from that low for 72 days. So call it 2.5 months. Not bad. 10 weeks, just over 10 weeks, it held up. So when I'm talking about a possibility of a short-term low here, maybe we're looking at something like 1 to 3 months. We're a few days in now, so far it's looking all right. Sure, you could say that I'm doing it in hindsight, whatever tickles your fancy, but essentially we could see that bar a few days ago, seeing the volume come in, the high close, everything is looking all right for it. It's bounced off our 68 on the major term time frame. Now we're looking for a continuation of the reversal or an invalidation where we have to flip again. So there is a possibility of an invalidation here, saying that, well, the market, it's not a low and we're going to keep going lower. What I would see from that point is if we started to break down, obviously past that low of 25,400, that would then easily tell you show's over. But I probably don't want to see this go below 28,500 or basically 28,000, which would then be just below the 50% level of this small range right here, and then below the bar from the day before we hit that low. Okay, so that bar essentially, just to give the date, is the 11th of May. The low there is 27,700. So basically, if we started to break down into those 27,000 levels, it's probably looking weaker, and that we would then see an invalidation of this potentially being the low. And of course, we would look for lower prices from that point. But for now, I think we've gone on our major run of the downside for this particular move, which has lasted, if we measure that from the peak to the current low, that has been 45 bars, so a month and a half. So we had a month and a half down. We saw from this low in January to the peak, a month, 2 months up. 2 months up, month and a half down. Maybe we'll go sideways for a little bit here just to give that market some time to recover, possibly a few weeks, a month or so up, and then come all the way back down again. Because I'm still expecting a low later in this year, and I'm not sure whether it will be a lower low or a higher low, but it seems at this point, if we don't get this bigger bounce on to above the levels of, you can see under here, these lows here, probably need to get above $40,000, then we're probably going to drop back down and take our time to get back to a lower low than 25K, which would then bring the moving average up as well. I know the market has hit the 200-week moving average every single bear market. So that might bring that moving average up a little past 22K, because currently it's sitting at 21,847. So as that starts to climb, maybe 22, 23, and we just wait for the market to come back and hit that. What else are we looking for on the macro term time frame? So we've looked at the invalidations, if the low was taken out. Macro, again, looking for a move above 34,500. That's going to be a pretty key level. If we saw the market continue just to bounce its head, get knocked back at 34 or 35K, then we're probably going to come back and test that low again. So I'm seeing this as a potential low for now. We're never 100% sure, which is why we move towards the fear and greed plan, just as a nice basic entry in the market while the market's super, super fearful, to be able to pick up some Bitcoin at the lows. And should this not be the low and we get to move back towards any of these previous resistance levels and find them as support, then I'm pretty sure the fear and greed plan would then read extreme fear again, because we're in a bear market, which would then give us more opportunities to be picking up some Bitcoin at cheaper prices. Hence, our average price would then be brought down from the approximate 33K, hopefully into those $20,000. And of course, at the time, if the market is at lows and we're buying Bitcoin at 18, 19, 22K, it's going to feel really awful having an average price of 30K. But I think in 2-3 years' time, Bitcoin will be above 70K, 80K, 100K. So it's not going to seem so bad having that entry price at around 30K. It's all been mechanical. So being able to reduce the noise in the market, reduce the emotion that chews us up in the bull markets, and then sit us or place us really well for a move up, potentially a 3x, a 4x, a 5x for Bitcoin. And it's been very, very easy. Nothing too strenuous here, nothing difficult. It's pretty much straightforward. If this happens on a fear and greed, then do this. And like I looked at in yesterday's video, looking specifically at times to sell to reduce that position down, to then reduce that average price down even further as the market begins to rise. If you love the sound of that, stick around at the end of this video. I'll leave a playlist up here and also this side right over here, so you can click on those videos and check out how exactly to position yourself and plan for the bull market coming up, I think, in the next sort of 12 to 24 months. That gradual climb will be there. Thanks again for joining me. Like and subscribe. And of course, Bybit, link is in the description. Giveaways going on to Ethereum. We're giving away exclusive here with Bybit. 4 lucky winners, half an ETH each. Don't miss out. Check out the links down below. And I'll see you guys at the next video. Till then, have more fun to get more done.